Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of those thick corporate reports, and sometimes, just sometimes, we find a real page turner. Today we are diving deep into the heart of VIP Play Incorporated's latest annual report. This is a company in the sports betting world, and their financial story is quite the roller coaster. Before we jump into the numbers, if you love getting these kinds of financial insights directly from the source, make sure you hit that subscribe button and join our Discord community. It is linked in the description below, where we break down complex financial stuff in simpler terms and share our findings. Let's kick off by looking at the company, S Financial Health. And it is a bit of mixed bag as of the 30th of June 2025. VIP Play Incorporated had total current assets of just under $2.9 million, but a working capital deficit of over $31 million. That tells us they owe a lot more in the short term than they have readily available. Now, when we look at the bigger picture, their net loss for the year ended the 30th of June 2025 was nearly $19 million. That is a significant number, and it follows a net loss of over $30 million the previous year. This tells us that while they are generating some revenue from their sports betting operations, they are not yet profitable. One interesting item here is depreciation and amortization. For the year ended the 30th of June 2025, it was just under $1 million, a big drop from nearly $1.8 million the year before. This decrease is mainly because they sunsetted their old Zen Sports app and wrote down its related assets. And speaking of writing down assets, the impairment of developed technology and trade name jumped from $0 to almost $6 million this past year. This is directly linked to that sunsetting of the Zen Sports app. It means the value of that technology was written down significantly. Sales and marketing expenses also saw a substantial decrease, dropping from over $2.2 million to around $1.1 million. This is mostly due to a reduction in promotional bonuses given to players. Then we have other expenses. These decreased dramatically from over $15 million to just over $3 million. A big reason for this is a much smaller loss on the change in fair value of a derivative liability, which is related to a conversion feature in their financing. Last year, that loss was nearly $9.5 million, while this year it was a gain of $47,000. When we look at cash flows, operating activities used over $10 million this past year. That is slightly better than the previous year, which used almost $11.3 million. The reduction in this cash burn is mainly thanks to the smaller net loss and reduced sales and marketing costs. Investing activities used over $1 million this year compared to less than $500,000 the previous year. This increase is mainly due to investments in their new VIP Play app technology. Financing activities provided over $11.4 million this year, a slight decrease from nearly $11.9 million the year before. This difference comes from fewer proceeds from convertible notes, but that was partially offset by more money coming in from a related party line of credit and stock issuance. Now, let's talk about a really serious point for any investor. The report clearly states there is substantial doubt about the company's ability to continue as a going concern. This is due to their history of losses, negative cash flows, and that large working capital deficit. They are heavily reliant on outside financing to keep operating. This limited operating history means it is tough to really predict their future success. They are in a new industry, facing competition and regulatory hurdles. They need to raise more capital to fund their growth plans, develop their products, and get those much needed regulatory approvals. There is no guarantee they will be able to do so, or that any future financing won't come with tough conditions. Like many companies today, they face risks related to cybersecurity. They have security measures in place, but there is always the chance of breaches, which could lead to legal issues, financial penalties, and damage to their reputation. Another big risk factor is the potential volatility of their stock price. Given their early stage and financial situation, the market price can swing wildly due to various factors, and investors could see significant losses. They also haven't paid dividends and do not expect to in the foreseeable future. As of late September 2025, they had over 73 million shares of common stock outstanding. And here is a key point about ownership. Bruce Cassidy, through his associated companies, holds a massive chunk of the voting power, almost 75%. This means he has significant control over company decisions, including electing directors, potentially limiting the influence of other shareholders. VIP Play itself describes its business as a next-generation mobile sports wagering company. They are licensed in Tennessee and have an interim license in West Virginia. Their strategy involves a proprietary cloud, native technology platform aiming for innovation and player engagement with AI-driven insights. They also use Canby Group's technology to enhance their sportsbook. The auditors, Grassi Seco CPAs, have issued their report. They state that the financial statements present fairly, in all material respects, the company's financial position. However, they also highlight the substantial doubt about the company's ability to continue as a going concern, echoing the company's own disclosures. Looking at their balance sheet, total assets were about $3.7 million as of June 2025, a decrease from over $9.3 million in 2024. This drop is largely due to a reduction in intangible assets. On the other side of the ledger, liabilities stood at almost $34.8 million in 2025, an increase from over $22.5 million in 2024. This growing liabilities figure, coupled with the shrinking assets, contributes to their significant deficit. So, what is the story here? VIP Play Incorporated is a company in the fast, growing but highly competitive sports betting industry. They have a technology-focused strategy and are expanding into new markets. However, they are facing significant financial challenges with substantial losses and a pressing need for further funding. Their reliance on related party financing and the concentration of voting power add further layers of complexity and risk. At this stage, VIP Play looks like a company with potential but facing a very uphill battle. They need to achieve profitability and secure stable, long-term financing to survive and thrive. The risks are substantial, and investors are certainly taking on a high degree of uncertainty by putting money into this company at this point. Alright, that is our breakdown of VIP Play Incorporated's latest annual report. What is your take on these numbers and what they signal for the company's future? Do you think they can navigate the financial challenges and capitalize on the sports betting boom? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to join our Discord community linked in the description for more direct financial insights and discussions. Thanks for watching. See you next time.